So we had a pretty calm day on the market today. Nothing really too big happened or any big news to report. So we're closed tomorrow for Thanksgiving. I figured this would be a good opportunity to work on a few subscriber requested videos. So guys, just be on the lookout. If you have any videos you want me to work on, I'm going to send out these little community cards from time to time. So just be on the lookout for those. And, you know, I have one right now. We've got quite a few video ideas here, but I'm just going to start at the very top. So the first one was Fed the Realtor, and he said PayPal versus Square. And it just so happens that's one of my favorite subjects. And that's a video I've been putting off for a while. So let's go break down and compare Square and PayPal. So guys, as we go through this video, you will see Square does have fundamental problems. And I've always forewarned investors about that. You know, like I said, even going back to as far as my first video I made about them. You know, Square is not the polished, you know, fundamentally perfect company that we all would like to invest in or should be invested in. There is a lot of risk associated with Square. So what really makes Square tick is the massive quarterly revenue growth, the great earnings, and you know, the huge demand for the product that they offer. So let's just get started. Square has about a $25 billion market cap, and right here I've already spotted a problem. They have a forward PE of 86 and a trailing PE of not available. So right there, easily identifiable problem. You know what you're getting into when you invest in Square. It's very high risk and low profit. You know, they don't even, like I said, they're not fundamentally balanced enough or profitable enough to even have a PE ratio. So a lot of people will stop right there and, you know, decide not to get involved with this stock, or they might even say, you know what, this is a good stock to short. And over the past month, this has been a really good stock to short. Now let's move right down here to the profitability, and I've spotted about 4 or 5 more problems. So, you know, negative in the profit margins, negative operating margins, negative on assets, negative on equity, okay? So this almost goes against every principle I teach about, you know, fundamental analysis, is that, you know, you never want to invest in a company that's negative like this. However, you know, Square has been a very disruptive company, and like I said, the massive earnings growth and, you know, really just the vision of the company, the direction they're moving, and in the space that they're in, there's been so much massive growth. So it's really kind of a visionary, high risk. Like I said, I would not put, I'm an investor in Square. I've been an investor in Square in a long time. I've also traded the stock a lot, but I would not want my big money in Square. Okay, there is a lot better and more fundamentally sound companies to be invested in. Right here, guys, they have about a 9% short sellers on the float and 6.6% of the short sellers on the shares outstanding. So this stock does get shorted a lot. Even going back to that big drop they took right there in the first part of October, you know, Square gets shorted very, very heavily. And I would say most of them have probably covered by now. But there is some bears out there who are relentlessly negative on Square stock. So right here, quarterly revenue growth 50%. That is really good. And about $2.98 billion on their revenue. And this is also a good fundamental right here, guys. The one reason why I've always felt Square is a really decent company to invest in is because of the $1.17 billion cash they have and $1.02 billion of debt. So they have more cash than debt. Now that is kind of a safety net for investors. You can look at that and say, okay, I can feel comfortable. You know, if we do get in a recession or we do get in really hard times, Square has the amount of cash to debt to survive. Okay, their ship will not sink if we get in a really, really nasty economy. Now let's take a look at PayPal, guys. And PayPal, like I said, my suggestion to everybody would be PayPal is probably the better investment fundamentally. Okay, so from a fundamental standpoint, you're going to see really quick PayPal is the superior company. They have about a $93 billion market cap. Was not long ago that they were well over a $100 billion market cap. PE ratio is much more manageable. So the trailing P is about 45, forward PE is about 27.38. Right down here in the share statistics, you can see this stock is far less shorted. It's shorted only about 1.3%. Okay, so that is a lot better metric to see. Like I said, you're not going to see the probably as much run up like on an earnings report, not nearly to the percentage that Square does, because you won't have all these short sellers covering, causing a short squeeze. But fundamentally, it's a lot healthier of a company. So I jammed down right here to the balance sheet, guys. $9.59 billion of total cash and only $2 billion of total debt. So if you want a fundamental answer, your better investment would be PayPal. Okay, so you could buy PayPal stock and probably sleep a lot more peacefully at night, where Square is far more risky. Now we've got the 1-year chart pulled up on Square, guys, and this thing has really been bullish over the past year. One of the best, easily outperformed the S&P 500 over the past year. Got up as high as $101 per share. Like I said before, it tanked in October, and then of course everything kind of tanked with it. We're still trying to recover, trying to regain some ground that we've lost, but Square has really depreciated, nearly 40%. Since those highs at the end of September and the start of October. So here's the 1-year chart on PayPal, guys, and oddly enough, to be a much more fundamentally sound company, it has a lot more peaks and valleys than Square stock does. As you can see, back here in January, it hit $84 and $85. Like I said, close to a year ago, and it's actually trading under those levels now. Okay, but like I said, again, a lot of that is really to do with overall market pressure. If we pull up a 5-year chart, as you can see, PayPal has been a wonderful investment, and they were only IPO'd back in the 13th of July in 2015. So just a little over 3 years. You would have nearly tripled your money by now. Going back to the 1-year chart on PayPal, guys, there you have it. And I'll click right over here, and you can see, oddly enough, Square is far less fundamentally strong, but the chart patterns are a lot tighter and neater, and there has been a whole lot more growth over the past year in Square than PayPal, where PayPal has traded really choppy, and of course, like any stock, is a great dip buy, but has traded a lot choppier than Square over the past year. So I guess in conclusion, if you want a company that's more fundamentally sound, like I said, safer, a stock that you can, I would say, represent the space probably a little bit better with a little bit bigger market cap and probably more funds to grow, you would probably want to invest in PayPal. But if you want the raw growth and the raw quarterly revenue growth power that Square brings to the table and all of their disruptive force, I would say, invest in Square. But the real answer, like I said at the start of the video, I want both of these stocks, okay? So I invest in Square. I also have a method that I invest in PayPal, and I will share that in a video I'll make tomorrow. Drop me some comments, guys. Let's hear your opinion. Let's see which stock you think is a better investment or better for trading, or just whatever comments you have to add to this video. I can't wait to hear it. And, thanks for watching the video, guys.